Let's move on to the Netcare Group, which has businesses in South Africa and the UK. And apart from hospitals, it also owns Netcare 911 and Medicross.
Yep, a fabulous South African-based company, almost you could say a market leader here in this country, although perhaps slightly smaller than the Mediclinic Group in some respects. But you know, the international ventures were not quite as successful, relating specifically to the timing of their UK market entry about a decade ago.
When it comes to size, 49.2 billion rand, PE of 18.4 and a dividend yield here of 2.7%. We got out of Netcare. Maybe we should have held on to Netcare rather than Mediclinic, or not?
We at some point dabbled with different parts of the sector, but actually we've been with Mediclinic in the main for a good long period. The Netcare thing is quite a long time ago.
JP, let's get your thoughts on Netcare.
I see a lot of value in Netcare as well. Once again, the company's shares have been under pressure. They bought that stake in GHG in the UK about a decade ago, as Paul mentioned, and recently they renegotiated some of the lease payments, because it's quite a complicated deal in terms of how it was structured. But you've got the properties in one corporate entity, and then you have the operating entity in another. And the operating entity pays rent to the property entity, and that's where most of Netcare's interest is. And they renegotiated the property rentals downwards. So that's a net positive for Netcare. So if you take that off, which used to be a negative overhang on the share price, to say that at least is now neutral, what you're left with is a SA-based operation, which is performing reasonably well. Two of the hospital groups, local ones, have reported. Netcare is going to report, I think, this week even. So we'll get the latest from them very soon. But for now, the burden of disease and the South African operations is okay, and therefore I see value in Netcare.
Let's just have a look at the share price graph to give us a sense. I mean, it's holding up a hell of a lot better than Mediclinic, Paul.
Look, in 2013, there were some anxieties that the property structure situation in London was going to really be a fundamental one for them, but they did kind of do a Houdini trick where they sort of offloaded and reduced their own interest in the propco in order to kind of get those out of the accounts, created a bit of noise. But what I like about them is the continuous and progressive approach to asset improvement here in this country. New facilities, you know, they're doing that new Christian Barnard Hospital in the foreshore in Cape Town, taking existing facilities, expanding them, making sure they've got the best operatives in all of those. Their margins remain good. So I think it's a quality group. And the UK thing, well, you know, at one level you could say Brexit, but at some point that stuff all comes up.
Why did you decide to sell Netcare?
You know, we bought them in anticipation of that property renegotiation, and when that came through, that's when we went out of the stock, because it looked as though they'd sort of shot up too high. And then we didn't want to be in every single part of the sector, and we preferred Mediclinic's internationalization strategy.
And we've also got the Discovery exposure and the Aspen exposure.
Exactly, so we have plenty of healthcare as it goes. Yeah.
What do you think of that decision?
I still see value in Netcare, but yes, if you have quite a few companies in the same sector, I can understand it. But sometimes you get a broad theme that just sells down a lot of shares in the same sector, as has happened in the healthcare sector. And then I don't mind having multiple exposures to the same sector, because they all show value, and I think that is where we are right now.
Is there any reason that you wouldn't buy Netcare?
Well, because we're on the cusp of the results coming out, there could be something we just don't know about, which is a reason for the share price not doing better after the rental renegotiation. There's also talk that the balance sheet is now in a position that they can look for a next acquisition in another geography, which comes with risk. So I think one needs to keep your eye out on there. And then the last thing would be the South African operations, where we mentioned that for now the first time medical aid membership is trending negative year on year. If that continues and you see significant pressure on that, the burden of disease and the increase in paid patient days won't be enough to actually sustain the South African operation profitability.
Let's call it, hot or not?
I'd be hot on Netcare, particularly noting JP's point about the resolution and the forward negotiations and the possibility of a better relationship between OPCO and PropCo over there in the UK.
Hot or not, JP?
Hot at this price.